now, pulling into the fast lane as well. Sanjay Parekh is with us, founder and CIO at Sohum Asset Managers. Sanjay, good afternoon. Good to have you with us here on CNBC-TV18. Of course, you're slightly overweight on autos, but I mean, you have the big guys, right? Ashok Leyland, Mahindra & Mahindra, there's Samvardhan Motherson, Aisha, and a few more. But just to get a sense of whether you're surprised by this sharp turn that we're seeing, the ferocity of the turn. And where does it leave us in the very short term? It leaves us exactly where we were last Friday. And if you go back to the conversations then, it was, generally the refrain was, things are expensive, one has to be very choosy. You're basically back there very, very quickly.
Yeah. No, Prashant. So, it's been a whole week which was very, very volatile. And certainly, the way we approach it is, one is an active zone where if, markets are at a particular level and stocks are at a great level, you be very, very active because market is not going to leave too much of opportunities. And then because of this volatility, it's a zone where you become inactive actually, because, you're anyway invested at 92, 93%. By God's grace, funds are doing well. And, you wait for a right opportunity or the right level for markets. And it's better to be inactive for a while till you get again any stock or market levels, because given the volatility in the market itself, it will throw opportunities on both sides. So you could buy if there is a big fall and also reduce. So you have to be a little tactical also. And then, have the core philosophy of invested in your stocks, that is. And that's how we are approaching this markets.
So, did you buy anything, sell anything? Did you buy anything on Monday, sell anything on Tuesday, or buy anything on Wednesday? And if you can give us a sense, so for example, if the portfolio value was 100 last Friday, what did it fall to, and where is it now?
Yeah, so we are, we are back to our peak returns that we were at 75% on peak returns in 2 years. So now we are today at 74.5%. And our performance is just between 28%, 28.5% is now 28%. So that way we have fairly insulated this fall and rise. But of course, on that day, given a cyclical tilt, when the fall was sharp at 5.9%, we fell a little more. And then now again we'll come back. So it is, and to answer you, we were totally inactive on Monday. We're totally inactive on Tuesday. But once we got clarity on Wednesday morning, that things are, the NDF government will very likely form, and, markets are a little nervous, then we increased our exposure. And that was across the board in financials, in our stocks, in energy. So, it was, we increased our exposure and that helped us, So now our cash levels are low. Even IT we added recently last week, because after 2 years of big underweight, we increased our weight by 2%. And now we are underweight, but we are at 7.5%. So because now, while we still remain underweight on IT, because this year is challenging, but if you take even 10 to 12% return and 3% dividend yield, then in this environment, 15-16% return is not bad. So that's why we increased our allocation to equity, to IT. So that's how we've been approaching to markets.
And you're saying that you bought individual stocks on Wednesday?
Yes, Wednesday first half. In financials, as I said, this new energy company that we already own. So we just increased our exposure. Where we knew that it was, they're attractive. 55, 760, ICICI. These were all, you just had to be, the broad picture. If you're we did preempt on Wednesday morning that things are fine, and hopefully, things will be fine. And that's what we believe, that in larger caps every month, wait for that winner at times. You don't, where you think there's an opportunity, and if you take a last, you could have winners, and that's the approach we are having, even in mid and small cap, but more so in large caps.
Sanjay, but even in every bull market, there are deep corrections which go beyond 5%, go up to 10%, sometimes even more up to 20%. We haven't had lasted only one day.
Yeah, so Reema, one is, we have 15 crore active is very, very powerful. A tweet wherein they had some data saying on the day where I'm yet to verify it, but second thing, rightly. So, once market realize that the India government will further stability will be there, all our balance sheets are firing. So, under the Prime Minister leadership, even with allies, they would not want to derail this and take it forward when they worked so hard for it, including the allies. So they've never made us nervous that anything on on further accelerating of growth, there'll be any big dilution. We were not so worried, particularly in areas of investment and infrastructure. There could be some issues around oil prices, where I think they may take a pause. A little bit on agriculture, where maybe they'll maybe on MSP prices they would want to be a little more populist. But overall, I think directionally, after such a hard work and all our balance sheets being so good, they will only want to accelerate it further. And that's an answer to unemployment also, inflation also today, respected governor said, is reasonably in control. And that's why I believe that, we are on a growth path. And rightly, that's why we are not getting big reactions. With the only challenge, as I said, is valuation. So whenever you get that pockets of big underreaction, you'll see markets being bought into.
Okay. Hi, Sanjay. Good afternoon and good to see you. Well, Sanjay, one space where you're overweight in comparison to the benchmark is the telecom space.
Yeah.
And you're not playing Vodafone Idea directly, but you're playing Industars, which is, somewhat of a play. If Vodafone Idea survives, then they get bulk of their money. And it appears, on the whole, you're bullish on the telecom theme. The couple of stocks that you'll have over there, the Bharti Airtel stock, as well as the PP. Tell us, what are you factoring in here? A price increase that comes about, maybe a big IPO, and you must be factoring in three-player market, right?
Yeah. So one is, of course, as we discussed last time also, broadly, the opportunity for the digital space is huge. You will see conversion from 2G to 5G. You will certainly see not one, but two pricing increase in the next 18 months. And, the pie in terms of the overall AGR revenues will certainly go up. So here is where, Bharti being a leader, they are having very strong revenue market share. They are also strong in postpaid and extremely efficient player, and will move from high capex to mediocre capex and hence FCF generation. So while valuations are now rich, and I'll not recommend anyone to invest in the near term, but from a longer term point of view, we still feel there's a very good runway for growth. And you rightly said, while we didn't participate in Voda, but Voda clearly would now survive and certainly do better. And we always wish well, having seen that for 15 years. And that would mean better times for tower companies like Indus, where the analysts were writing off 4,000 to 5,000 crore of EBITDA. And luckily, earlier we bought around 220 to 30. Now, not only that 5,000 crore EBITDA will be recurring, but there'll be growth on that. So suddenly a company which was looking 11 minus 5 at 6,000 crore is now 11,000 crore plus another 3,000 crore of EBITDA, which is 13,000 crore. And then slow growth ahead. And that's why it's pretty reasonable even today at 7.5 times. So we are holding on that as well.
Okay. So, Sanjay, to round things up, are you looking at any further incremental changes? I mean, we've been having this debate pretty much throughout, given how the market quickly moved to FMCG. Then there's been a lot of buying on IT. What would your final advice be? All things put equal, I mean, we are almost at all-time highs right now. should one be taking more profits off the capital goods / manufacturing side of their portfolio and rotating into some of these consumer / defensive names? What's the final advice here?
Yeah, so, defensives internally also we discussed that, it's important to get the entry price right and, the growth price earning equation right, growth valuation. I mean, today also, FMCG, we are 0 today and it's recently moved up. So while we like the consumer theme and we are participating through other stocks, but here, your company is at 10% growth at 45 times, 50 times. Even on implied growth, we're still not comfortable. So on the delta, they may move up. Some of them have done well, but we are happy avoiding it. On the IT space, I said we've increased our weight, knowing that while this year is going to be very tough, but hopefully slowly and steadily, 26 could be better, and it's difficult to exactly pinpoint whether 26 is going to be better. Hence, our underweight, but it makes sense for high ROC companies with dividend yields of 3-4%, FCF yield of 4.5%, to have some exposure increase in this environment. And if we can get 15% return with the right entry point after a 2-year underperformance, we were fine. So that's where we increased our weight to IT. Overall, domestic themes were still very, very positive. You could have bits of here and there in a sense, but generally entire domestic theme. And on capital goods, what you asked is right, that we will be cautious to add on the euphoric valuation, but there will be always pockets of opportunity. So what we are looking at is opportunities in each segment, bottom up, and in that volatility, the stocks that we like, if we can get those at the right valuations, we are going to add.
Okay, Sanjay, it's always a pleasure, and thank you very much for joining us. And coming off a little bit from the day's highest point, but we're still solid, 480 points at this stage. We'll, I think, take a quick commercial break here. We'll come back and we'll tell you some short-term trading ideas here. What can you do? Mitesh will be with us to help you with that. And then we come back on the other side with more conversation. Stay with us.